Welcome to the second episode in our ongoing series titled Crypto Market Valuation. In the first episode, we spent a lot of time talking about Bitcoin. Our fundamental premise for all our analysis going forward centers around Bitcoin. So it was important for us to establish a solid foundation when it came to understanding Bitcoin. And the way we did that is we went through and did a Bitcoin scenario analysis. Now, if you've not watched that episode, I would strongly urge you to go back and take a look at it, as it really sets the foundation for the discussion going forward. In that episode, we concluded really that the narrative for Bitcoin going forward is most likely to be this Gold 2.0 narrative that we've described. Okay, so what we'll do in this episode is we will build on that by looking at what we think Bitcoin is likely to do from a price perspective in this market cycle. Now, before I go any further, obviously I'd just like to add that the standard disclaimers around use of this information applies. This is not investment advice. We present this information for interest and for, I guess, educational benefit. Use of the information to make investment decisions is purely at the user's own risk. I guess I'll also add that, if you do like the content, we would appreciate a like. Also, we plan to issue more episodes. It's estimated that this is probably going to be a 4 or 5 part series. So if you want to get get the information hot off the press, then also hit that subscribe button. We'll be very grateful for that. Okay, so how are we going to go about the discussion today? Well, to determine what we're likely to see this market cycle, we're first going to focus our discussion a little bit on the characteristics of Bitcoin. Now, I appreciate some of you are not new to Bitcoin, so this may be old information for you, but for those of you a little bit new, I think this will be helpful, particularly because some of the characteristics I'm going to describe is actually key to understanding some of the assumptions that we make as we look at the forward price behavior that we're likely to see this market cycle. We'll then have a little discussion around Bitcoin price volatility. There might be a little bit of a perception that Bitcoin investment should be avoided because it's too volatile. At least the price is too volatile. So we'll dive into that a little bit, and I think you'll find that there are some very interesting conclusions that can be made. And then finally, we will look at what I consider the two competing theories when it comes to Bitcoin price. Okay, the first one is known as lengthening cycles, diminishing returns theory, and the other one is known as stock to flow theory. So we will look at both of those. But before I begin, I'd just like to start with a quote from Bitcoin's founder, the mysterious Satoshi Nakamoto. And this is the quote he made in 2009 when on one of the message boards someone had asked him how he felt price would behave given that there will only ever be a fixed supply of Bitcoin. And this is what he said. In this sense, it's more typical of a precious metal. Instead of the supply changing to keep the value the same, the supply is predetermined and the value changes. As the number of users grows, the value per coin increases. Now, when I first read this quote, I was pretty blown away by it because, firstly, when Bitcoin was just an idea, Satoshi had already likened it to a precious metal such as gold. Today, over 10 years later, that narrative is now being realized and it's gaining popularity across the world. So quite a visionary to have already seen that potential back in 2009. But I guess also more importantly, what he's doing here is he's creating this link between supply and demand with scarcity through a fixed supply being at the root of it. Okay? Which leads us nicely into describing some of the characteristics of Bitcoin. So this is a very high-level description. There's a lot more detail behind this, and I would encourage anyone who is new to Bitcoin to continue understanding some of these key features. That helps give an appreciation for just how incredible a technology Bitcoin is. But okay, the first point to make is that all transactions are recorded on a decentralized public ledger that is nearly impossible to corrupt. Okay, that in essence is how the blockchain works. Linked to that is all transactions are pseudonymous and transparent. Now that may appear on the face of it to be a little bit of a contradiction in terms, but what we're really saying is that on the blockchain, all Bitcoin transactions, we can see when they happened, how much the transaction value was worth, which address the transaction came from, and which address the transaction went to. What you can't tell, and hence the pseudonymous nature, is who those transactions belong to, not from the information on the blockchain anyway. Now, if you did a little bit of forensic work outside to gather information that sits outside the blockchain, that can be determined. Which takes me down a little side road around privacy. I would advocate that anybody who's going down the Bitcoin rabbit hole, as the term is referred to, it is well worth spending time understanding the importance of privacy, because there are certain things that can be done to ensure that your transactions that you make on the blockchain can remain as private as possible. Okay. Pertinent, though, to the discussion in this episode are the next 2 points. Firstly, Bitcoin has a fixed issuance rate that halves every 4 years. So when the protocol first went live, new coins were created through what is known as Bitcoin mining every 10 minutes. And the rate was roughly, as I said, it was roughly every 10 minutes, but 50 coins in that period. Okay, so 50 coins roughly every 10 minutes, and after 4 years that got halved to 12.5 coins roughly every 10 minutes. Now that's hard-coded into the protocol, right, and is nearly impossible to change. So when you hear the term a halving cycle, what that means is that we're moving from one issuance rate to another, right, where the subsequent issuance rate will be half of the preceding one. The last halving cycle happened in May 2020, where the issuance rate went from 12.5 Bitcoin to 6.25 Bitcoin roughly every 10 minutes. Okay, and then also importantly linked to that is there will only ever be 21 million Bitcoin that will ever be in existence. Okay, so that's again hard-coded into the protocol, and it's nearly impossible to change that. Now, because of this decaying issuance rate, the last Bitcoin will be minted in the year around the year 2100. Okay. I think also it's worth noting that Bitcoin itself, or one Bitcoin itself, is divisible. Okay, so you shouldn't think of it as a kind of whole coin. Maybe it's a little bit difficult to kind of visualize, but one Bitcoin is divisible into a unit known as a Satoshi, where 100 million Satoshis equal one Bitcoin. So if you were interested in buying Bitcoin and you're looking at the price of Bitcoin and you're going, well, I can't afford one Bitcoin, there's this popular adage that you'll see in Bitcoin Twitter: you don't have to buy one whole Bitcoin. Right? It's possible to buy fractions of a Bitcoin. Okay, so hopefully that gives you a little bit of an appreciation for some of the key characteristics that give Bitcoin its value. But I guess the question or a thought or a perception that some people have is that, the price of Bitcoin is too volatile. And when you look at the price history on a XY plot, you would, you wouldn't be wrong to have that view. Okay, when Bitcoin first came out in 2010, or at least that's where my graph goes up until, you can see that the price remained relatively flat. Sometime between 2013 and 2014, there was a little bit of a bump, but in 2016 and 2017, suddenly the price started to take off, and it went up as high as nearly $20,000 a coin, roughly toward the end of 2017, early 2018. And then the price just came crashing down, and it sort of zigzagged for a bit between 10,000 and 5,000 US dollars a coin. And then recently, the price just rocketed up. Okay, so you would be forgiven if your perception was, well, this is just really too volatile. I can't predict where the price is going to go next. Maybe this is not an asset class that I'd want to consider. But interesting things happen when you plot that same data, but instead of having the y-axis be on a normal scale, you plot it on a logarithmic scale, right? So what you see there is each major grid line, instead of going up by units of 10, it goes up by units that are an order of magnitude, okay? And what this does is it kind of takes that volatility in price and it dampens it, and you start to see some very interesting things, okay? For one, you can see that although there is, peaks and troughs that occur in the price pattern over time, the general trend appears to be up. So when you do a little bit of regression analysis, okay, and you look for the average price, you can see that. So that's depicted by that yellow line, which is basically the average price of Bitcoin as it moves through time. And you can see there's a very clear upward trend. However, that trend does seem like it flattens over time. Okay, so it's not a straight line up. It sort of seems to be, it seems to be flattening, as I said, over time. Now, what is even more interesting is when you put the halving cycles represented by those dotted lines, those are the dates when Bitcoin issuance rate halved, you can see that there almost appears to be a reaction to it. Once there's a halving cycle, or halving event, I should say, the price then seems to move up, and shortly after that, then it moves down, and we have a halving cycle again, and then the price responds to that. And there also appears to be very clear phases where what I refer to as bubble phases and non-bubble phases. So the bubble phases or the mania phases are represented by those peaks with the red circles, and the non-bubble phases is the time after that, right, where Bitcoin sort of settles down to what you might call a fair market value. Again, interesting that these happen before and after the halving cycle. Okay, so what conclusions do we want to make with this by sharing this information? Well, in my mind anyway, yes, Bitcoin is volatile, but as I said, there seems to be a very clear upward trend, right? So I guess the moral of the story is, if you hold your Bitcoin for long enough, there's no reason why you shouldn't think that over time it will retain its value. Okay, so the concept of Bitcoin being too volatile is maybe not a correct, it's not a correct view if your attitude is that, this is something that you're going to hold over time. I think the other thing to note is that there appears anyway to be an influence around halving events. So once we've had a halving event, it's probably not unreasonable to expect that the price of Bitcoin would react to that. Okay? Right. Now let's go into the two price theories as a means to sort of predict where we think the price of Bitcoin might go into in the future. The first one is lengthening cycles and diminishing returns. Now, what does that mean? Well, it's actually quite a simple concept. If you look at the peaks, we say a cycle is from a peak to a peak, and each subsequent peak, the time taken between the peak gets longer, and the height difference between the new peak and the old peak gets shorter. So what that effectively means is it takes longer for Bitcoin to get to its top price in that particular cycle, and relative to the cycle before that, the returns that you will expect won't be as high. Okay? So what I've attempted to do there on the graph is make an estimation. It's not based on any mathematical analysis. It's just a little squiggly line that I drew, where we make an assumption that if the returns are going to be less than the previous cycle, then we can estimate a height, and the length will also probably take a little bit longer for us to get to that peak. Okay. It's very clear that the last two cycles appear to follow this trend. So we're not basing this on anything that doesn't have some kind of, well, I guess, basis, right? The interesting thing, though, is that lengthening cycles and diminishing returns mutes the influence of the halvings. Okay, so ultimately what we might see, if the trend of lengthening cycles continues, is that the peak price pattern might extend beyond a particular halving cycle. Okay, now there are many people who have written a lot of detail about this. If you do want to know more, I would say the best YouTube resource for this discussion is the Into the Cryptoverse channel, and it's it's run by a guy called Ben Cowan. He's a PhD engineer. So he applies some data science, and he does a very good job of explaining and I guess making a case for why lengthening cycles and diminishing returns is likely what we're going to see. Okay, but if I can broadly summarize his work, in essence, what he's saying is that although it's not clear what we are going to see in this market cycle in terms of the market top, we can't say it with 100% certainty, but the estimate, depending on when it happens, if you follow that red line, is we should see a Bitcoin price of around 150,000 US dollars per coin as the market top. Okay, and that we'll only likely see, at its earliest probably is late 2021, but more likely into 2022. Okay, so that gives you an overview of lengthening cycles and diminishing returns. Now let's talk about stock to flow. So this was a model that was released, I believe, in 2019, and it was developed by a Bitcoin quant known as Plan B. And effectively what he tries to do is he tries to measure Bitcoin scarcity using a stock to flow model, where the stock refers to the amount of coins in existence and the flow refers to the issuance rate. So, in qualitative terms, the stock to flow ratio is basically a measure of scarcity where it refers to a time unit, and that time unit is the amount of time it would take for the current supply to be replicated based on the current flow. Okay, so it's the amount of time. If I had 100 gold bars, okay, the stock to flow ratio would measure the amount of time it would take for me to replenish that 100 or recreate those 100 bars of gold based on a rate at which I'm minting gold bars. Okay, so there are some interesting features about this. The stock to flow model does account for the halving cycles because the flow rate changes. In his paper, he's written 3 papers on the stock to flow model. 2 of them are time series, but he ran into some trouble when he issued the paper, and it got scrutinized by other quants. So there was some mathematical, I suppose, laws that were not being observed. So he couldn't use a time series model, or the time series model was invalidated to a certain extent. So then what he did was he created the stock to flow cross asset model, where he took time as a variable out of the model, and instead what he did was he used other assets like gold and silver, and he plotted them on the same graph. So he had this, I guess his new stock to flow cross asset model, and it also has received some criticism. But what I find quite astounding by it is how closely it tracks, um, you know, how the current price of Bitcoin actually tracks the model. Okay, so if you look at this image over here, you can see the rainbow graph there is the actual Bitcoin price, and it's kind of color coded based on number of days until the next halving cycle. So red and orange, it's going to take some time before the next halving cycle, and then yellow, green, and then blue. We're getting closer to the halving cycle, and you can see that interestingly, it responds quite well to that. The prediction and the actual price respond quite well. Now, if we were to extrapolate, then we would expect to see in this halving cycle a Bitcoin price of around $300,000 per coin, right? If the model is going to be observed. And I think it's important to note as well that this is an average price. You can see in previous cycles, the actual price does peak above the stock to flow model, and then it does go below it. So when I say 300,000, or more specifically $288,000 per coin, it could peak above that for a little bit as well. So it's not a maximum price. Now, what's quite nice about the stock to flow cross asset model is that it links in quite nicely with the discussion we had in the first video, which is, this notion of Bitcoin transitioning through scenarios. Okay, so Plan B in his paper, and again, I would encourage you to go and read that. I provided a reference in Medium for you to find the paper. It's not a very difficult paper to read. It's actually very approachable, even for those of you who are not mathematically inclined. It's well worth reading. But inside the paper, he talks about this notion of phase transitions, where initially Bitcoin is a proof of concept, maybe what we called our tulips in the previous episode. He then says, it goes through this payments phase. Maybe we called it a medium of exchange scenario. Then he refers to e-gold, which we call digital gold in our previous episode, and then ultimately it becomes this financial asset as well. Now, obviously, it's not a one-to-one relationship here, you know, but I just found that he, you know, in his paper also acknowledges that Bitcoin can become something else from what it is today. Okay. And the interesting thing as well about his model is that because he's now comparing it with other asset classes, the price can be interpolated rather than extrapolated. Okay, which maybe for some of you is a small point, but it does mean that we are now looking at price with more robust benchmarks. Okay, right. So I guess the question then is, which one is right? Now, I did find it quite amusing toward the back end of last year. Um, Plan B got into a little bit of a Twitter spat with Into the Cryptoverse. What he did was he plotted the price history of Bitcoin after each halving. And what's quite interesting is that you can see that the current price is sitting in between the first halving and the second halving's price history. Now, under lengthening cycles and diminishing returns, you shouldn't see that, right? What you would expect to see is that after each halving cycle, that curve gets flatter. So the red line should sit below the blue line and the purple line. Okay, so Plan B, sort of very tongue-in-cheek, poked fun at Into the Cryptoverse, saying, "Rest in peace, lengthening cycles and diminishing returns." Personally, I mean, I wouldn't say that I'm 100% convinced that that's the case. Certainly, it is looking good for stock to flow, but there's still plenty of time for us to see what happens. Also, um, you can't not take account of what's happening around the world at the moment. Okay. Um, there's been unprecedented levels of money printing by the central banks around the world. So I guess the question I have is, has this not just accelerated the current cycle? If we didn't have COVID-19 and the response to COVID-19, would we still be seeing the same behavior? Now, some people might say yes. The world's economy was already on shaky ground even before COVID-19. So maybe it's not unreasonable to assume that we would have seen this anyway. However, I think a little bit of patience is probably warranted, and let's see what happens with the price. But so far, I'd say stock to flow looks like the dominant forward price predictor, which means that we can have an average price in this market cycle of around $288,000 per Bitcoin. Okay, so that brings us to the end of this discussion. Again, I hope that you found this interesting. I mean, the temptation is to go into a lot more detail here, but I think what we're trying to establish here is just some kind of expectation of what we are likely to see in this market cycle. So using this information in the next episode, what we're going to then talk about is some Bitcoin price indicators, right? Remember, the ultimate goal here is to see, if we can use information about Bitcoin and about the altcoins to time when we should enter and when we should exit the market. So this has given us some very broad appreciations for, what Bitcoin is becoming. And as a result of that, what is the price that we're likely to see over the next 12 to 18 months and maybe beyond that. Okay, so as I said, in the next video, we will look at some more fundamental price indicators that we can use to see if our approach around where Bitcoin is likely to go will remain on track. Okay, so again, thank you for sitting with us, and hopefully you've again enjoyed this video, and we will see you in the next one.